Greenland was once considered remote, frozen, and economically irrelevant to global power structures, that perception has changed dramatically due to converging economic, geographic, and technological shifts. What appears like ice and isolation now represents access, leverage, and long-term strategic value. Understanding Greenland's importance requires examining geography, resources, climate, and global competition together. The first factor driving Greenland's value is its unmatched geographic positioning. Globally, Greenland sits between North America, Europe, and the Arctic shipping corridors. This location gives it control influence over emerging transpolar trade routes. As Arctic ice melts, seasonal shipping windows expand year by year steadily. These routes shorten travel distances between Asia, Europe, and North America significantly. Shorter routes reduce fuel costs, transit time, and logistical dependency on choke points. Traditional choke points like the Suez Canal, Malacca Strait face congestion and vulnerability. Arctic routes offer alternatives, reducing strategic risk for global trade networks. Greenland becomes a reference point for monitoring and securing these new corridors. Ports, airfields, and communication infrastructure gain value as transit traffic increases. Geography alone would matter less without economic resources beneath Greenland's surface. The second factor is Greenland's vast untapped mineral and resource potential. Greenland contains rare earth elements critical for modern technologies and defense systems. Rare earths power electric vehicles, wind turbines, smartphones, missiles, and advanced electronics. Global supply of rare earths remains heavily concentrated within a few countries. This concentration creates supply chain vulnerability and geopolitical leverage. Concerns worldwide. Greenland offers diversification, potential, reducing reliance on existing dominant suppliers. Beyond rare earths, Greenland holds deposits of uranium, zinc, iron ore, gold. These resources were previously inaccessible due to ice and extraction costs. Climate change has reduced ice coverage, improving feasibility of exploration and mining. Technological advances further lowered extraction costs and operational barriers. Resources. Access transforms Greenland from symbolic territory into tangible economic asset. The third factor is climate change, reshaping Arctic economics permanently. Warming temperatures are altering coastlines, ecosystems, and infrastructure viability across the Arctic. While climate change carries severe global risks, it creates localized economic openings. Greenland's ice loss exposes land-sea routes and resource zones previously unreachable. This exposure increases international interest, investment, and strategic planning. Related to Greenland climate realities are forcing governments to reassess Arctic regions as economic frontiers. Greenland becomes a focal point in these reassessments due to scale and location. The fourth factor involves military and security considerations tied to Arctic access. The Arctic is no longer a passive buffer zone between major powers. It is increasingly viewed as an operational theatre for surveillance and defence. Greenland hosts critical early warning radar systems monitoring missile trajectories. Its position allows detection, tracking, and interception planning across hemispheres. As great power competition intensifies, Arctic security gains prominence strategically. Military planners value Greenland for basing logistics and monitoring capabilities. This does not require militarization but presence infrastructure and cooperation agreements. Security interest reinforces Greenland's strategic importance beyond pure economics. The fifth factor is technological dependency, reshaping resource and location priorities. Modern economies depend on energy, data, minerals, and secure infrastructure networks. Greenland's proximity to transatlantic data cables enhances its digital significance. Arctic routes also affect undersea cable planning and redundancy strategies. Energy transition technologies increase demand for minerals located in Greenland. Thus, technological evolution amplifies Greenland's relevance across multiple sectors. The sixth factor is shifting global power dynamics and competition. As traditional growth regions saturate, nations seek new strategic advantages. The Arctic represents one of the last relatively undeveloped global regions. Greenland sits at the centre of this emerging strategic map. Major powers recognise that early engagement shapes long-term influence outcomes. This drives diplomatic, economic and infrastructural interest in Greenland steadily. The seventh factor is governance and political structure influencing access decisions. Greenland operates under autonomous governance within the Kingdom of Denmark. This creates unique negotiation frameworks, balancing local interests with international engagement. Foreign investment, resource development, and security cooperation require political alignment. Greenland's leadership weighs economic development against environmental and cultural preservation. This balancing act adds complexity but also strategic leverage in negotiations. The eighth factor is global supply chain fragility, exposed by recent disruptions. Pandemics, conflicts, and logistical fiscal failures highlighted dependence on concentrated supply nodes. Diversifying supply sources has become a strategic priority for governments and corporations. Greenland's resources offer potential diversification opportunities within stable governance frameworks. Stability increases attractiveness compared to regions with political volatility. This reliability premium adds to Greenland's strategic economic value. The ninth factor is energy transition, accelerating demand for Arctic resources. Renewable technologies require minerals sourced from limited global locations. Greenland's deposits support long-term energy infrastructure build-outs. As energy systems shift, demand patterns favour regions with resource availability. Greenland enters strategic calculations linked to decarbonisation goals. The 10th factor is long-term horizon planning by governments and corporations. Strategic assets are valued not only for present utility but future relevance. Greenland's relevance is expected to increase rather than diminish over decades. Long-term planning elevates its priority within national strategies. This contrasts with short-lived resource booms elsewhere, globally. The 11th factor is infrastructure feasibility, improving steadily. Airports, ports, communications, and energy systems expand. Greenland's accessibility. Improved infrastructure lowers barriers for economic activity and integration. Infrastructure investment signals commitment and reduces operational uncertainty. These developments compound Greenland's attractiveness as a strategic asset. The 12th factor involves legal frameworks governing Arctic resources and navigation. International law shapes access rights, shipping lanes, and resource claims. Greenland's position within existing legal structures offers predictability. Predictability matters for investment security and long-term strategic planning. This legal clarity distinguishes Greenland from disputed regions globally. The 13th factor is environmental stewardship shaping responsible development models. Global scrutiny requires sustainable practices in Arctic development. Greenland's governance emphasizes balancing growth with environmental protection. This positioning appeals to investors facing regulatory and reputational pressures. Responsible development increases long-term viability of resource exploitation. The 14th factor is demographic and social considerations within Greenland itself. Economic development offers opportunities for local employment and infrastructure improvement. However, social impacts require careful management to avoid displacement and inequality. Local consent influences long-term success of strategic projects. This social dimension adds another layer to Greenland's strategic calculus. The 15th factor is symbolic significance in global strategic narratives. Control, influence, or partnership in Greenland signals Arctic engagement seriousness. Symbolism affects perception, credibility, and bargaining. Power internationally. Greenland becomes shorthand for Arctic relevance in policy discussions. This symbolic value complements tangible economic and strategic benefits. Together, these factors explain why Greenland transitioned from periphery to priority. No single reason defines its importance, but convergence creates momentum. Geography, resources, climate, security, technology, and politics align simultaneously. Such alignment is rare and historically transformative for regions. Greenland's emergence reflects broader shifts reshaping global economic geography. Ignoring Greenland now represents strategic blindness rather than neutrality. Recognition does not imply exploitation, but acknowledgement of changing realities. Strategic assets emerge when global systems evolve around them. Greenland's rise illustrates how climate and technology reshape economic maps. Understanding this transformation clarifies why attention intensified so rapidly. This sets the foundation for examining risks, trade-offs, and future implications. Those implications define how Greenland's role continues evolving globally. As Greenland's importance rises, new risks, tensions, and constraints emerge alongside opportunities. Strategic assets attract competition, which increases pressure on governance and local decision-making. Greenland must navigate interest from powerful nations without losing autonomy or stability. This balancing challenge represents the next phase of Greenland's strategic evolution. The first major constraint involves environmental vulnerability, unique to Arctic ecosystems. Resource extraction, infrastructure, and shipping pose significant ecological risks. Arctic environments recover slowly, amplifying long-term damage from the industrial activity. Global scrutiny intensifies as climate sensitivity raises ethical and regulatory standards. Greenland's leadership faces pressure to prioritize preservation alongside economic development. Failure to balance risks, backlash, reputational harm, and long-term losses. Thus, environmental governance becomes central to Greenland's strategic calculus. The second constraint involves infrastructure limitations despite recent improvements. Harsh weather, remoteness, and limited population complicate construction logistics. Building ports, roads, and energy systems requires higher capital investment. Operational costs exceed those in temperate regions, affecting project feasibility. These realities slow development timelines and raise financial risk premiums. Investors must account for delays, unpredictability, and seasonal constraints. Infrastructure remains a bottleneck, moderating Greenland's growth trajectory. The third constraint concerns human capital availability and workforce capacity. Greenland's population is small, limiting domestic labour supply significantly. Specialised skills often require importing external workers. This creates dependency on foreign labour and expertise. Managing workforce integration, cultural preservation, and community impact becomes necessary. Human capital limitations restrict speed and scale of development projects. Long-term strategies require education, training, and population sustainability initiatives. The fourth constraint is political complexity within Greenland's governance structure. Autonomy provides flexibility but also introduces negotiation layers. Greenland balances local priorities, Danish oversight, and international partnerships. Policy decisions must consider domestic consensus and geopolitical implications. External pressure risks, polarizing internal political discourse. Maintaining unity is essential for stable long-term strategy execution. The fifth constraint arises from geopolitical competition, intensifying around Greenland. Interest from multiple powers increases diplomatic complexity and strategic signaling. Aligning too closely with one actor risks alienating others. Neutral positioning requires careful diplomacy and transparent governance. Practices. Geopolitical rivalry increases scrutiny over investments and partnerships. This environment demands sophisticated statecraft beyond traditional economic management. The sixth constraint involves legal and regulatory uncertainty, evolving with Arctic development. International frameworks adapt slowly to rapid climate and economic changes. Disputes over navigation rights, resource claims, and environmental responsibility may emerge. Greenland must operate within evolving legal interpretations and treaties. Legal uncertainty can delay projects and deter investment. proactive legal engagement becomes necessary to protect long-term interests. The seventh constraint is financial exposure linked to commodity market volatility. Resource prices fluctuate based on global demand, technology, and geopolitics. Dependence on resource extraction introduces revenue instability risks. Boom cycles constrain governance while bust cycles undermine development plans. Diversification remains essential to avoid resource dependence traps. Strategic planning must account for cyclical volatility inherent in commodities. The eighth constraint is social cohesion within Greenlandic communities. Rapid development can disrupt traditional lifestyles, cultural practices, and social structures. Economic benefits may distribute unevenly, creating inequality tensions. Community consent becomes critical for legitimacy of strategic projects. Failure to engage locals risks resistance and project delays. Social stability directly influences Greenland's long-term attractiveness as strategic asset. The ninth constraint relates to security escalation risks in the Arctic. Increased military interest heightens risk of miscalculation or signaling conflicts. While militarization remains limited, surveillance and presence are expanding. Greenland becomes part of broader deterrence and defense frameworks. Balancing security cooperation with peaceful development remains delicate. Security considerations increasingly intersect with economic planning. Decisions. The 10th constraint involves climate uncertainty itself, while warming opens access. As unpredictable weather patterns increase operational risk. Ice melt creates navigational hazards and infrastructure instability. Climate projections remain uncertain, complicating long-term investment assumptions. This uncertainty demands adaptive planning rather than fixed development models. Climate risk management becomes a core strategic capability. The 11th constraint is public perception and global accountability. Greenland's development choices face global media and activist attention. Reputational risk influences investor participation and diplomatic relationships. Transparency and responsibility shape external support and legitimacy. Public opinion increasingly affects economic feasibility in sensitive regions. Strategic assets must align with evolving global norms. The 12th constraint involves technological dependency and supply chain integration. Extracting and processing resources requires complex global value chains. Disruptions elsewhere can stall Greenland-based projects unexpectedly. Dependence on external processing reduces local value capture. Developing local processing increases cost but improves resilience. Strategic decisions must weigh integration versus autonomy trade-offs. The 13th constraint is fiscal management capacity amid potential revenue growth. Sudden inflows risk governance, challenges corruption and inefficiency. Strong institutions are necessary to manage increased financial complexity. Revenue management frameworks determine long-term developmental outcomes. Poor fiscal management undermines strategic potential despite resource abundance. Institutional capacity building is therefore essential. The 14th constraint concerns intergenerational responsibility. Decisions today affect Greenland's future environmental, economic, and cultural landscape. Short-term gains risk, long-term costs if mismanaged. Intergenerational equity influences public support and policy legitimacy. Strategic planning must extend beyond immediate political cycles. Future generations become stakeholders in present decisions. The 15th constraint is strategic patience. Greenland's value unfolds over decades, not years. Rushed exploitation increases risk while measured development preserves flexibility. Patience allows alignment with global transitions rather than reactionary moves. Strategic assets reward timing, discipline, and long-horizon thinking. Misjudged timing can permanently damage long-term opportunity. Together, these constraints shape Greenland's path forward as strategic asset. Opportunity exists, but success depends on governance, discipline, and balance. Greenland's challenge is not attracting interest, but managing it responsibly. The region stands at intersection of opportunity and vulnerability. Strategic value amplifies consequences of both success and failure. Learning from past resource-driven regions becomes essential. History shows unmanaged booms often end in stagnation or conflict. Greenland's leadership aims to avoid repeating those outcomes. This requires institutional strength, transparency, and inclusive development planning. External partners influence outcomes, but local agency remains decisive. Strategic assets do not guarantee prosperity without governance capacity. Greenland's future depends on choices made under increasing global attention. Those choices will determine whether strategic value becomes sustainable advantage or whether pressure undermines autonomy and long-term resilience. Understanding these constraints provides realistic perspective on the Greenland's rise. It highlights complexity beyond headlines and simplified narratives. Greenland's story is not inevitable triumph, but managed transformation. This understanding prepares ground for evaluating future scenarios and risks. Those scenarios will define Greenland's role within the evolving global economy. Greenland's rise reflects how geography, climate, and resources reshape global economic priorities. Strategic assets emerge quietly before becoming central to international competition dynamics. Understanding these shifts helps anticipate future economic and geopolitical transformations early. Follow the channel for continued analysis of emerging strategic regions and global economic shifts.